So welcome guys, I really hope you've enjoyed the course. I hope you've finished everything, managed to succeed in your 30-day challenge, and congratulations. I hope it's been a very fulfilling experience for you, and finally you do grasp the footprint course in its entirety. Now, the bonus material, obviously I haven't really let leak exactly what the bonus material is going to be, but it's going to be all about Bitcoin. I think the reason being it doesn't exist. I don't think anyone on the globe has thought about utilizing the footprint course with the Bitcoin, and that's why we're going to speak about it. I think Bitcoin is something that is now here to stay. We obviously have all four of the major global futures exchanges offering the product. So again, if you want to be an early adopter, take advantage of the Bitcoin product. The footprint tool is actually very, very interesting, and I'm going to show you some fantastic opportunities with the Bitcoin and the footprint tool. Okay, so this is how we're going to do it. This is what the stream is going to be all about. We're going to start off, and I'm going to talk a bit about setup. Okay, so what we're going to talk about in terms of the setup is very simple. I'm going to talk about how to set up your chart, time-based, rotational, etc., and all that, so that you can utilize the information in an effective manner. Once we've spoken about the setup, we're going to talk about why this tool. Okay, so why will this tool work well? Why this tool work well? Okay, and this is important, guys, because I think a big mistake people make is they tend to sometimes utilize the same tool across different markets and expect to get the same sort of information coming to them, and that's important. Some tools are going to work slightly better in certain environments, and some tools aren't going to work as well. And this is where knowing the nuance of the tool and really understanding what a tool does will come in handy. Okay, once we've dealt on the why, then we're going to turn our attention to a process. Okay, and this is, again, as your mentor, this is going to be pretty much what the stream's about. I'm going to give you a process that you can adopt, like I gave you the template within the actual footprint course. I'm going to give you a bit of a template now to start you off. And again, remember, don't take what I say as is. Make sure you develop your own template, your own understanding, and your own edge ultimately with trading the Bitcoin. Okay, once you've dealt with the process, I'm then going to move into the fun part. You remember those strategies we dealt with throughout the footprint course that we spent a lot of time on. We're then going to adopt those strategies into one trading session. I think that's exciting. We were recording the Bitcoin yesterday, and I'll tell you right now, we found 6 strategies, 6 of the 10 strategies that you learned in the course. We found those in one 5-hour trading session. So I'm going to show you those trade strategies. I'm going to show you how they played out, really convince you that the footprint tool can be utilized in whatever market, but you have to learn the principles, which you've done obviously, because you've now completed the footprint course. Okay, let's get straight into it then. So to do this, what I'm going to do is I'm going to bring up the recording of the footprint, and we can go from there. Okay, so the first thing, and this is where a lot of people, looking at this are probably going to, wonder how on earth do I go about this? Well, the first thing to note is obviously you're going to see a lot of zeros. Okay, so how do we set this up? How are we going to set this footprint course up, this Bitcoin up, so that we can, actually make any kind of meaningful sense of it? Okay, now, the first thing is that we need to decide whether we're going to go rotational or whether we're going to go time-based. Okay? Now, for me, again, obviously do bear in mind, guys, I've played around with this only briefly. So again, it's up to you to sort of take a few ideas and go enhance those ideas for yourself. For me, though, I think right now there's no point in working with rotational. Okay, why? Well, simply speaking, Bitcoin is moving in the ranges of $1,500. Okay, so what rotation are you going to use? Right? Now, obviously, when we spoke about some of the rotations we used throughout the course, it made sense to use, for instance, a 0.1% rotation in the E-mini S&P. It made sense to use maybe a 10-tick rotation in the gold. Why? Because 10 ticks equals $1. Right? That made sense. However, with Bitcoin right now, it's too volatile to have any kind of meaningful rotation, and that's why we're not going to use a rotation for Bitcoin. What we are going to use is time-based. Now again, throughout the course, we used 1-minute time-based, 5 minutes. Why? Because I really wanted to show you the interaction that was taking place in all the markets. However, again, because Bitcoin at the moment, it's very illiquid. Sometimes it doesn't move for 5 minutes, all right? Sometimes a contract doesn't even trade for 15 minutes. So there's no point in us using a shorter term time frame in terms of the footprint. What we are going to do is I am going to recommend you look at either a 30-minute, a 60-minute, or even a daily time frame. Okay, so those are the time frames you want to focus on when setting up. All right, now for me, for the purpose of this example, this is going to be time-based. It's going to be a 30-minute time-based. Again, for me, that shows enough information that allows me to drill in and have a real look at what's actually going on the footprint. All right, now, once we've got that time frame sorted, we then want to talk briefly about shading. Remember what I said to you throughout the course. Keep it simple. Don't play with the shading too much. Again, shading won't help you here. Why? Because, well, we're only trading a couple of hundred contracts at the moment. So if we're doing 500-600 contracts a day, you can have 5 different shades, but again, it's not going to show you anything meaningful. All right. So whilst it's illiquid, keep the shading to the traditional 3. All right. Okay. Down the line, obviously, if we do start trading a lot of volume in the months and weeks ahead, by all means, play with that shading, so long as it adds information. All right. Keep it simple. Okay, so with that being said, we've pretty much got our setup sorted now. We're going 30 minutes and we're going 3 shades. In terms of what you can see in front of you before I get playing, we've got the footprint obviously on the left, we've got the price ladder in the middle, and we've got a 30-minute chart on the right side. Okay, now, obviously remember we spoke a lot about cross-pollination between tools. So where I'm going to start this before we get playing is, I want to start with the technical structure that you're looking at. Right now, this obviously to put things into context, because context is important. If we go back to yesterday, in essence, what you were looking at was a really full-bodied red candle. Okay, and what had happened was it was the launch of the CME on Monday, which was the 18th. On Tuesday, effectively, we now sold off, and we had been stuck inside this range. So the market had kind of been almost forming a bit of an inside day within the Monday open. Okay, and that's where we are now. We're stuck inside the sideways range. The Bitcoin is being, obviously every time it's getting sold off, the sellers are disappearing and the market's then bouncing. And equally, every time it's running into sort of resistance around the 19,500 to 20,000 level, it's being sold very aggressively. Okay, so that's where we are, guys. Now let's roll the tape and let's play with this and let's go through a few things. Okay, actually before we get there, let's quickly come back to the whiteboard and just discuss the other elements. So the first thing I want to talk about is why. Okay, it's the big why. Why use Footprint for this tool? Okay, and it's simple, and it's something that, obviously when I'd gone through the tool, I'd spent a bit of time thinking about this. Why do I want to use the Footprint tool for Bitcoin? Okay, and it's simple. It comes down to one word, right? Participants. Right, so at the moment, who is trading Bitcoin? Well, I can tell you right now, you've got market makers. Why? Because they have an incentive. Okay, so what's a market maker's incentive? Well, he's there to make a market. Right? He doesn't speculate, he doesn't care where price goes, he just simply makes a market and obviously gets some very good rebates as a result. Then you've got a couple of speculators. Okay, now the speculators are obviously retail, maybe a couple of hedge funds, a couple of small fry, maybe a couple of, I don't want to say banks because that might be a little bit dangerous, but again, we got a number of different speculators in the market. And then the last sort of type of participant, and again, I'm going to use this word loosely, are hedgers. Okay, I don't know how many people are hedging Bitcoin. Again, the product was created as a hedge, but again, good to know. Obviously, a hedger's objective is not price directional, rather it's to manage risk. All right, so in terms of that, if we look at the participants, we can see we've got a few market makers, not price sensitive. We've got a couple of hedgers, not price sensitive, and speculators, very price sensitive. All right, so why is it that I think the Footprint is so good with regards to trading the Bitcoin? Well, it's simple, right? Because there are so few participants, i.e. you didn't see me show once there any algorithms, okay? So because there's minimal participation, what that implies is that when there is participation, all right, you're going to see it very clearly. You're going to see precisely, i.e., what a speculator is going to try and do. You're going to see precisely what a market maker is trying to do. And you're going to see precisely what a hedger is going to do. And that's the key. Okay? Because if you can drill in and see exactly what one participant is doing, and then another, you're going to determine what their strategy, what their approach is. Okay, and that's where, you know, when I show it to you on the footprint in a minute, you're going to see that it's almost magnified. It's a thing of beauty actually. How when there's few participants, the footprint actually stands out as a very strong trading tool. Okay, so that's the why. Now, let's then obviously turn our attention to the last part. Okay, which is a process. So how are we going to go about ultimately trading the Bitcoin? Okay, and this is the key. This is where a lot of people go wrong, right? They don't adopt a certain process or a strategy to trading the Bitcoin. Now, the first things first, right? Every single day, and again, I'm going to use this word process synonymous to templates. Okay, so templating. All right, so the first thing we need to establish is we need to look at metrics like volume. So I'm going to write up here metrics and give it an underline. So we need to look at volume. Okay, that can be daily volume. Okay, that can be volume on a 60 minute. Then we need to look at things like delta, as well as cumulative delta. Okay, as well as positioning. And again, these are all terms you have been dealing with quite extensively over the course, so I'm not going to go through them. But these are the metrics you want to look into. In other words, the end of day comes, you've traded the Bitcoin, you've observed it. Now you need to go and form a template, a process of how can I observe, how can I view, and how can I then develop strategy and approach from there. Okay, so i.e., if we come in and we see a day, it's the highest volume since the launch of Bitcoin, it's 2 times the amount of volume we did, what did the market respond? How did the market respond? Right? Was there a lot of absorption? Was there a lot of initiative? Was there a lot of two-way trade? What was happening as a result of that high volume? You determine that, and ultimately you are going to learn something new about the market. Okay, and you do the same for the delta. Okay, was there any position delta unwind? Okay, we spoke a lot about, you know, delta positioning and delta unwind as well as pocket positioning. All right, what happens in terms of the delta? Right? Was there net positioning on the day? Was it a neutral day? Okay, and you go and look and you determine strategy based on that. You can then think about cumulative delta as well as positioning. Those are the kinds of things you want to look at when determining a process that you can adopt to trading the Bitcoin. Okay, now obviously what I would say, we went quite extensively through that template. Don't be afraid to adopt that same template or at least elements of that template into your Bitcoin templating. Okay, because the structures will remain the same. The same principles you were learning with those other strategies will apply to the Bitcoin as well. All right, so that's the process that we're going to adopt. Now, once you've got this, and what I urge you to do is, before you then jump in and start trading, okay, it's very likely that not many people will be trading this, okay? Reason being is that there's not many retail brokers at the moment that will offer this in the futures. The margins are excessively high. To put it into perspective, we're looking at, I think it's 44% of the underlying is required by the exchange from your broker. So again, if we assume a Bitcoin price of roughly 20K, we're looking somewhere in the region of about $8,000 to $9,000. Okay, so that's effectively the margin requirement now. Okay, most retail traders don't have relatively large accounts. Okay, so one lot is effectively going to cost you $8,000 to $9,000 required on account. Okay, so to put that into perspective, you're probably not going to be trading the futures. However, it doesn't mean you can't have access via maybe spread bettors, maybe via CFDs, etc., etc. So don't be afraid to try this on a small scale. Get stuck in, start getting a feel for it. Okay, now, before I move on, one thing I do want to talk about with regards to obviously the ladder, and this is where we're going to end before I get you on there, is note obviously the type of volume. Okay, so what you'll see currently on the ladder, and this is the danger of Bitcoin, this is why brokers are not interested right now, is effectively we are seeing a 10 tick to almost 20 tick spread. Okay. So to put things in perspective, obviously Bitcoin is it's trading in $5 increments, right? So we're going from 25 to to 30, to 35, to 40, and obviously to 20, to 15, to 10. Okay, so we're trading in $5 increments on the price ladder. Now note, if we're doing a 10-tick spread when we're already trading at $5 increments, well, you've got to remember that effectively what you're going to be seeing on the ladder is roughly a $50 to $75 range. Okay. Now again, I don't want to scare you away. I just want to put things into perspective so you understand the nature of the market. Okay. So in terms of that, if that's the spread, 50 to 75 bucks, and we're trading $25 a tick, okay, you can imagine that, you know, to cross the spread, or i.e. to hit the market, you're going to be paying anything between, you're just going to be paying almost $300-400 just to enter the market. And that's the key, that's the takeaway. To be aggressive, i.e. to be aggressive in this market, is going to cost you $400 on a one lot. Okay, that's the key. That's quite expensive to be aggressive. To be passive, okay, it's going to cost you nothing. Right? Why? Because you're getting the price you want, but then you are fading the market, right? Now, on that topic, and this is where we're going to finish with in terms of understanding and process, okay? If you're going to be fading the market, bear in mind what we spoke about when we mentioned participants. There are not a great number of participants, right? So be careful standing in the way of flow. That's all I'm going to say to you. If the markets are flowing and trending, don't be standing against that, okay? Because there's no one that's going to stand against it with you. Okay. Equally, if the markets are flowing, bear in mind there are few participants, there's a lot of speculators, the market's very thin, which means it can overextend quite often. All right, that's the nature of the market. And the most important thing is, as you go through the Bitcoin, as you're observing it daily, recording, analyzing, and completing your template, you're going to pick up on these nuances. More importantly, and this is kind of what I try to get across to you throughout the entire course, the most important thing to understand is you don't need all 10 of those strategies in the Bitcoin. You only need one. You only need to find one of those strategies that I taught you in the course and apply it to the Bitcoin effectively. You do that, you can be very successful. All right, so let me then introduce you now. Obviously, the ladder we did, it was fascinating. I couldn't believe we had that many of the strategies all forming in one day. And so the strategies I'm going to show you are going to include the following. Let me write them down so you can make a note of them. You can maybe pause the video here, have a think, maybe draw them out so you recognize them again before I go through them. But those strategies included the following. Okay, it started off with an initiative drive. All right, so you all remember what an initiative drive is. That was the first strategy we saw. The second strategy we saw was effectively an absorption and auctioning. Right? Again, you'll remember that was unit 6. The third strategy we saw was key auction reversals. And I'm going to show you a beautiful example. It was incredible how tidy this was. We had the delta colors and everything. It was a fantastic example of a key auction reversal. And the fourth example we're going to use is again a breakout. And the fifth example was a failed break of support and resistance. And the last one was a wonderful imbalance. Again, I'm going to show you how effective this imbalance looked and ultimately how you can adopt that into your Bitcoin analysis. Okay, so those were the 6 strategies we got all on the same day. Let's get into that price ladder and let's go through them one by one. Okay, now the important thing to understand, guys, is as I go through this, again, don't fret too much that you can't see much on the footprint. Okay, that's not the purpose of this. I'm going to point it out to you. I'm going to show you what it looks like. Again, by now, the footprint ladder shouldn't matter much, okay, because you've got access to that, right? And the reason it shouldn't matter is because you've learned all of these principles. I'm just pointing them out to you now. I'm doing the debrief with you to show you that Bitcoin can be extremely effectively traded with the footprint. Okay, so let's draw the attention to the right side. We're going to start off, just talk about the structure. Okay, like we said, nice 30-minute structure. And we can see, obviously, a little bit of initiative the day before, some real aggressive sell-side action. Note the volumes. And ultimately, we then had once support, twice support, 3 times support, and 4 times support. Okay, so a traditional trend line. Now, as we said, initiative, that was strategy number one. The first thing to understand about initiative is we want to see a pickup in volume, volatility, and directional bias. Okay? At the same time, we want to see the delta move in the direction of the trend. Okay, so to start off with, I'm going to push play here, and the first thing I want you to observe is where we are trading. Okay, so what you can see right now is that we have we've broken down below that level of 1163. I'm going to mark it here so that you can see it on the chart. It's going to come in around this level. Okay, so that's the level we were looking at. That is the break of the trend line. Now, the first thing to observe, okay, is note the lack of trade just before it. Okay, so the market's taken the level out, and we've not seen a single counterbid. What we've seen is one sell side order, one sell side match buy, one buy side. Okay, so maybe someone's taken some profit. Now, before we move on and actually talk a little bit about this drive and watch the drive in play, I want to just bring your attention to where we are in the current moment. So what we can see on the day right now, we are negative delta of minus 22. Now again, this is so important, okay? A lot of you might go, yeah, but that's not a negative delta, okay? Bear in mind that on the day, we were talking, at this point in time, we'd probably only done about 100 contracts, okay? So to put things into perspective, we'd only done 100 contracts and the delta was negative 22. Okay, so it's a really, really large delta very early on the day. So we could see that sell side bias coming in very early in on the session. Okay, and that's what we're going to focus on. We're going to focus on this initiative drive now, watch how the market drives. And again, note, in terms of the initiative drive, it's not necessarily always about getting on it. It's not always that easy and straightforward. But what we definitely don't do on an initiative drive is we definitely don't go counter it. Okay, let it be. But once we've observed that initiative drive, like I showed you in the footprint course, once we've observed that initiative drive, don't be afraid to wait for that retracement and get stuck in. Okay, so let's look at this let's look at this initiative drive and see what happens over the course of the next couple of minutes. Okay, so we can see obviously now we're still trading around that key break of 863, and we're going to see that market now take it out. So straight away, we've now continued, we've made a new low on the day. And notice what's happening, okay? This is where the delta is interesting. Remember what I said, in an initiative drive, you should see very little counter trade, i.e. you should not be seeing anyone buying the market, anyone supporting the market. Now, what we can see straight away, obviously the market's broken below that 63 level. We have one sell order, we have a second sell order, and someone then tries to buy the market. Okay, what happens when he does buy the market? Right, straight away as soon as he buys, another sell order goes through and another sell order. Now just put things into context, that's roughly, what is that, $100 drop? Okay, yeah, almost $100 drop, all right? So since that buyer, he bought a one lot and we've dropped another $100, okay? Note the delta, still neg 3, neg 3. All right, to put things into perspective, our biggest negative half-hour rotation for the day is minus 11. Now let's continue on with the video. So we can see again, the market's continuing to auction, and we can see again another bit of one lots going through. Now note these participants. What will these be? Someone sitting below the low of the day. What will those be? Well, they're not going to be speculative longs. They might be, but most likely those are simply going to be market makers. That's their job, to make some form of a market for the exchange. Okay, so again, note another sell order goes through, and note suddenly a first buy order comes through. Now, this is the important thing to learn about Bitcoin, okay? And this is where the footprint is going to be so beautiful. You want to observe where the sellers are interacting, where the buyers are interacting, okay? So we saw a bit of interaction there, and what happens? Instantly, we see a seller sell, okay? And it sells down lower again. But now note what happens, and this is where I think it's lovely. Note the pattern repetition, okay? So market makers were making a price there, there, and there, with gaps or spreads in between. This is the first time now, note, this is the first time that we've seen market makers making a market at two consecutive prices. Okay, so we've observed something, which is we saw market makers at consecutive prices making the market. Now we want to see, again, we want to just log that into the back of our memory, because we want to see what happens now once the market finally goes back bid. Okay, does this hold? Okay, so straight away, look what we've just seen. The market's gone lower again. And what have we seen? So the market goes lower, and straight away, there are those two prices. Straight away, a market maker lifts the market. So we've had someone step in to buy the market, and the moment he stepped in to buy the market, what did we see? Someone else bought the market, and someone else bought the market. Okay, and that's what we observed, guys. We just observed market was coming down. It had sold off quite extensively, quite a strong move, almost $500. Bang, bang, we saw two market makers putting a bid in the market. They both got filled. It went one tick lower and bang, the market maker hit the market, bought it, and straight away we saw two more lots go through. Okay, now, again, I know that might not sound a lot, but let's put it into perspective, right? So over the course of the day, the highest volume we saw was on the breakout. That was 15 contracts. Now, in the space of 5 minutes, what have we seen? We've seen 1, 2, 3. We've seen 6 contracts trading in a space of 5 minutes. Okay, and that's the pickup. That's the nuance. That's what we're looking for. Okay, now, this was our second strategy, effectively, which is what we call absorption. It's what we call a key auction reversal. Why? Because when we went through the trade strategies in the course, I showed you guys that an effective low, a strong low or strong high, the first thing we need to see is we need to see someone responding to that low price, okay? More importantly, the speed at which the response occurs, that's the key, all right? A market that comes down and spends a lot of time responding, it's still a good low potentially, but ultimately it's not a very strongly auctioned low. However, a market that comes down, finds a market maker and it just straight away pounces back off, that is what we call a very key auction reversal. Okay, and that's what you're going to see. You're going to see now the price action completely shifts in this, and I mean you can already see that the price of Bitcoin has gone all the way from 18,300 back up in and around to 18,500. So we've bounced $250 just simply off that little bit of price action from the footprint. Okay, so step one, we saw the initial initiative breakout to went from 873 down to 250, 260, a nice $500 drive. We then ran into the market makers and we saw a very strong key auction reversal. Now remember what we said. Those key auction reversals, we want to put a nice colorful line. Why? I spoke to you guys about color lines, what they represent. Okay, key auction reversals, once we take them out, right, we do tend to get follow through. Okay, why? Because a key auction reversal is telling us that some significant buyers are stepping into the market to support the market. Okay, more importantly, obviously, don't forget, a key auction reversal has a very good bounce. It's not a shallow bounce, it tends to be a very strong bounce. Again, we spoke about that quite extensively earlier on in the footprint course. Okay, now, I want to turn our attention to the third trade opportunity, which is effectively the absorption and auctioning. In other words, we said when you have an initiative drive, in terms of the pattern, what we're looking for is the market to bounce. Once we find that absorption, okay, that's where we want to be switched on. Why? Because when it finds that absorption, eventually it's going to resolve itself, and we're then going to get the auction in either direction. Okay, now the either direction, if it goes to the upside, obviously that's the delta unwind strategy. If it continues in the direction of the trend, that's simply just obviously the retracement or the absorption and auctioning strategy. Okay, so let's go find that now. Let's go and have a look. In fact, we can see it straight away. All right, so the market's come up and we can see now, I'm just going to rewind this fractionally so you can see it being done. Okay, let's go back a little bit. Okay, so we can see the first little bit, and this is something I noticed, okay, and I've just run that down a little bit. Watch this 18,500. Again, the price ladder is not going to be a great help for this. Why? Because, well, as you can see, there's not much you can see on that price ladder. It's kind of just all over the show, okay? So this is where the footprint's going to be far more handy. What I want you to do is watch that 18,500. What happens when we come up there? You can see currently the market's now bid at 18,500. It's come up from the lows of just below 300, so we've done $250 odd. And this is the first time we actually see a sell-side response, okay? Now what we're looking for, remember, we've got the sell-off, we've got the bounce. What we're looking for here is we're looking for the market response. We're looking for a seller to step in and start absorbing the market and getting involved, right? And that's what you're going to see in a couple of seconds now. And I'm just going to move this a little bit forward. Okay, go back 1 second. Okay, so straight away, what you're going to see is that's going to move to a 2-lot. So you're going to see a little bit of transactional flow coming in. Now, the first thing to note is note the volume. Remember what we said? With a key auction reversal, you're always going to see really high volume. Okay, so straight away, bang, note. we've had a buyer step in. Where's he stepped in? At higher prices. In other words, he's found a seller, okay? Because in order for him to buy, he has to buy it off of a seller. Now note, obviously, we can see we've traded 15 contracts, okay? So the highest volume of the day. We've still got a very strong negative delta at this point, okay? And what we've seen now is the market's come up and we've found, obviously, a seller at the 18,500, and straight away we can see that another seller's been hit, another seller's been hit. So if you come look up here, very interesting again. It almost looks carbon copy of the low. Okay, the market was searching for a bit of a, it was searching for a seller. It found the initial seller at, call it 18,530. It then found another seller at 550, and then someone eventually got more aggressive and sold the market at call it 18,560. Okay, and that's the absorption, guys. That was the interaction right there. Buyers coming up the market, trying to find that seller, and bang, he finds that seller. The seller takes not just 1-2 contracts, not just absorbs, but he also then hits the market for one, and straight away, notice what he does. He hits for one up here, and he hits the next best price for another two at 18,500. Okay, do the math. So we've had one contract traded, 2, 3, 4. We've had 6 contracts traded in the last 1 minute. That's the seller. All in relative terms, guys. 6 contracts is pretty much, it's as good as volume's going to get, right? If you note, obviously you can see in some of the previous rotations, 6 contracts is sometimes more than we do in an entire half-hour contract, and we did it in 1 minute. That's the clue. That's the subtlety. There's your seller. Now, straight away, we call this the pocket positioning. Why? Because that's where the seller is now. We can see him there. He's just taken 6 contracts from the market. Okay. Now again, in terms of a participant, definitely a market maker there. Okay, could definitely be someone who's speculating, i.e. trying to get filled on a short. Maybe someone long taking profit. Maybe even someone hedging a position on the bounce. Okay, but that's our clue, that's our key, that's our absorption. So this is where we are in the pattern now. We found the absorption, and now we're going to see a process of sideways trade. So I'm going to fast forward this on, and we're going to move to the part where it actually starts to auction again. Now bear in mind at this point, obviously we have got a negative delta. And I should raise this quickly. Okay, so at this point in time, we obviously have got the negative delta. And let's see what happens now. Okay, so the market now spends a lot of time here, guys. We spend almost a good, sort of hour inside this range. Again, we can see it holding quite nicely. Buyers not willing to buy. And again, let's just pause it there for a second. Okay, so I've just moved that on a little bit. Notice what's happened now. Right, we've gone from trading 6 contracts, and we've just done another 6 contracts. And what's price done? Okay, it's not moved. The continuation of absorption. This is the absorption taking place now. We have now run into a place where buyers and sellers are interacting, and we're getting that absorption. Okay, note obviously at the same time, what's the delta done? And this is crucial. The delta's gone even more negative on the day. So we can see that delta now at minus 30. Okay, the most negative it's been on the entire day. Okay, more importantly, we can see the market has bounced in this rotation, yet the delta is still minus 8. So a prime candidate for a potential delta unwind strategy. But remember, we always favor the continuation of the trend before we start to look for the unwind. Okay, so that's our absorption. Now let's see how this plays out. So I'm going to fast forward this on a little bit, and all of a sudden, what we start to see is we get back below that first point. And this is where it starts to get very interesting, okay? So we finally break back below that absorption area of 18,500 to 18,600. Okay, and we suddenly start to leak a little bit lower. Now bear in mind, we've got shorts in the market. Okay, we've got obviously a potential for trend continuation. Why? Because we've broken down below that trend line. Okay, and the market's now searching. Okay, so these sellers are now filled. They're now searching for potential buyers. And let's see what happens when this occurs. Okay, so we can see 44's trade, 44's trade, 44's trade, nothing going on. And all of a sudden, what happens? Okay, all of a sudden, the market takes out that 18,500 top ledge, okay, which was here, so 18,575, and it finds the next buy. In other words, that entire distribution, we finally found another buy. So someone's bought the market. That might be a stop It might be someone buying, it might be a hedger. Okay, but it's definitely not someone who's price sensitive because he's just bought the market almost a good $150 higher. Now let's see what happens once he buys that market. Let's see how the market responds to this. Okay, so bear in mind, prices are substantially higher. Okay, we've just drifted in a significant amount higher. And all of a sudden, let's just fast forward this on. Okay, all of a sudden, someone sells it straight back down. Okay, so we're in that distribution. We sell straight back down. The next best lot traded, again, almost $150 lower. And again, I'm going to fast forward this on because this is the auctioning part now. This is where it gets very interesting. Okay, the next lot, as we can see, is the previous one. The next best lot trades, again, almost 200 contracts lower. So we've just done 3 contracts, okay, so 3 total contracts in a space of almost, what, a $600 range. So you guys can understand the volatility and the potential here. Okay, so that's pretty much the auctioning process. Now what you're going to see is we're now going to prep ourselves for the next strategy, which is the potential breakout. Okay, remember, when we do have a key auction reversal, we always pay attention to the extreme point. Why? Because it's a potential for a very good breakout. All right, and this is what we're going to watch now. We're going to watch the breakout and see the interaction. Again, note the initiative here, guys. One lot, one lot, one lot. Not a single buyer entering the market. Just sellers entering, hitting the market quite aggressively. That's the auctioning process after that after that half an hour we spent absorbing the market. Okay, note again the delta, just to run that up again. We are now minus 31 in terms of the delta on the day, and let's see what happens when we approach the low. Okay, so our low is taken out. Remember, this was our key low. Why? Because we had market makers there as well as buyers step in. Okay, key low gets taken out. What do we see? The most important thing on a breakout, we don't see any counter bid. Okay, so not a single buyer in the market on the other side. That's what we want to see in a breakout. We don't want to see the counter trade, just the initiative, the aggression to the downside. And straight away, what do we see? Someone steps in, not to absorb the market. And this is a very, very big clue, okay? We did not see someone absorb the market. So it's not a market maker. Okay, a market maker don't lift market, they get filled at market. So that's our first clue on the footprint. Right? No market maker there. Someone that actually physically bought the market. And straight away, it sells again, so another sell order, and this time a passive order gets filled. Now let's see what happens off of this clue. So we've got the breakout, but we've got a very aggressive buyer sitting on the other side. Okay, so again, guess what happens? Market maker gets filled. Okay, so aggressive buyer, market maker gets filled, and all of a sudden, what do we get? Straight away, very aggressive buyer. Okay, not waiting, not hanging around, not being passive, lifts the next best price. And straight away, what do we see? Bang, 1, 2, 3, 4 contracts lifting at higher prices. Okay, and that's the beauty of it. This is fascinating to see, because what you've just seen there is someone taking 7 contracts in a space of 3 or 4 minutes, okay, and bearing in mind the total volume of the day. Note what the delta's doing. For the first time in the entire session, we're seeing a positive delta. Now, remember what I said to you with breakout trades. Do we want to see a positive delta if the market's breaking out to the downside? No, of course not. And that's the clue, guys. That was the significant clue, because now our breakout strategy is gone. We're out of that trade. We've been stopped out. Okay, we haven't lost anything. Why? Because risk management, we stop out once we re-enter the original range. But now all of a sudden what we do have is our next strategy, which is the failed break of support and resistance. And this is a thing of beauty. Okay, so note, our support is there around the 1870, or call it 275. Up to 300. That's our support area. Why? Because that's the previous low. So what we're looking for now, we're looking for the market to bounce. Okay, we're looking for that initial aggression to subside and get away. And the moment it pulls back and retests that level, we want to get our longs off. Now let's see what happens. Let's see how the market interacts. Okay, so we can see next best price, 1841. So buyer lifts $110 higher. Again, continued aggression. Straight after that, we see a seller sell. Okay, that's the first sell order. And what happened? So that's the only sell order that went through. Okay, there it was. There was your opportunity to get a fill. Now again, in a thicker market, i.e. like we were trading euro, gold, etc., there will be a tendency to get fills or better fills than that. Right? We didn't get the fill. We had one sell order go through, and what did that buyer do? He not only got filled there, but he then lifted the next best price again. All right. So all we're seeing is a continuation of this very aggressive buyer who, one, bought off the low, didn't absorb, all right? We then got an absorption. He then lifted not just one, but 4 more contracts at best price possible. Very aggressive buyer. Okay, and then this plays out. You'll see now we have a really nice bounce. We can see obviously the, again, nice strong buyer, not waiting for fills, no real selling interaction. I think that was the key. And again, markets eventually just continue to retrace higher, and we got that failed break of support and resistance. Okay, eventually note, however, that did subside. The buyers took some profits, and what did we get? Sell side, sell side, sell side, sell side. Okay, and guess what? Take a guess where that sell side came in. Well, I'll give you a clue. It was that same bit of pocket positioning that we saw around the 18,500 up to 18,600 area. Okay, we spoke a lot about this throughout the course. The market went back, tested that 18,500, and what did we see? We not only saw the strong buyer backing off, but we saw those sellers stepping in a very meaningful way, again selling 4 contracts, re-establishing that negative delta on the rotation, as well as the negative delta on the day. Okay, and that's pretty much how it played out, guys. Now, there was one other thing I really wanted to talk about. It was the imbalances taking place. And I briefly want to touch upon this. Again, I don't want you to get too bogged down, but I just want you to understand a little bit of the interpretation of the imbalance. So I just want to move this across a little bit and bring you back to that 18,500 area that we were talking about. Okay, so let's have a look here. Let's talk a little bit briefly about imbalances. Now, this is the area we're talking about, the pocket positioning. We spoke about that quite a lot throughout the course, but this is where I want to sort of finish this off and talk about imbalances, okay? So if you were to look at this, now remember an imbalance, obviously we're looking across the way. We're looking at the buying versus selling relationship, or are the buyers being more aggressive at higher prices versus sellers at lower prices. Now, straight away what you can see in this pocket positioning is that there's a massive sell imbalance, not just because of the color. Probably the delta at the bottom gives it away, but let's look at it. Okay, so the market's come up to this 18,500 area, and what's happening? Okay, firstly, what we saw was absorption. All right, so straight away, initially what we got, the absorption came a little bit higher. Right, that's the absorption name. So the market came up and it gave anyone on the offer a fill. But the moment that seller got filled passively, what did he do? He went bang, and he went bang, and he went bang, and he went bang, and he went bang. There was so much sell-side orders coming in once we hit this 18,500. Right? We then saw a secondary attempt. But what was the secondary attempt? This is the key. Right? When the buyers then turned again, what did they do? They only bought 2 lots. Okay, so we see in this entire area, this entire range, what was happening was the buyers were buying very little. In other words, the buyers were not being aggressive at higher prices. They were being passive, of course, because we can see all this selling has to sell to a buyer. Right? So the buyers were passive at high prices, but they were definitely not aggressive. On the flip side, what were the sellers doing? Were the sellers being aggressively selling? Okay, 100% yes. Right? You can't see any kind of sell side getting filled here. Why? Because the buyers weren't buying from them. So the sellers had to go to the buyers, right? And the buyers were forced to accept the higher prices. And that's the key, guys. In terms of the pocket positioning, there was a massive imbalance here of a lot of sell-side pressure. The sellers were really, really being aggressive in this 18,500 up to, call it 18,575. And the real tip of the iceberg, I think this is kind of where you want to finish it off, but the real tip of the iceberg was when that market did suddenly trade a 1 lot at 710, the speed at which it got hit back down, I'm just going to show you that very briefly. The speed at which it got hit back down, we're talking about 1 lot traded. Okay, the next lot traded at 18,500 and the last lot traded at 18,360. So we went all the way from $700 or 18,700 all the way down to 18,360. Okay, a good $400, $350 odd move on 3 contracts. Okay, again, when was that? Where was that initiated by? It wasn't initiated by the buyers. Okay, one buyer maybe stopped out, a seller got filled, and straight away the seller stepped in and hit the market quite hard. All right, that's it, guys. That's the Bitcoin summary. That's Bitcoin debrief. That's the footprint in action. And I think, again, I hope that illustrates not just how effective this tool can be, but how effective it can be in terms of the interpretation of the Bitcoin in particular, whilst there are minimal participants. Okay, that's the key takeaway that I want you guys to kind of take from this. Now, the goal of this, right, is not to necessarily go trade Bitcoin. Right? The whole purpose of this bonus material was to give you an understanding that the footprint tool can be utilized anywhere. Right? It's a principle-based tool. It allows us to understand that interaction between buyers and sellers. Your goal is to take your strategy that you enjoyed the most. Like I said to you in the course, you only need that one strategy. So go and take that strategy that you find comfortable, that matches your characteristics. Take that strategy and try and adopt it to the Bitcoin. Paper trade it, try it, see if it works well. See if you can understand a methodology in which you can utilize it. All right, to wrap off, guys, obviously, don't forget, you can obviously get your free 1-month trial with a membership. Obviously free from Axia. Just send the info@axiafutures.com an email with obviously the title as Footprint Free Premium Trial. And they will activate that for you. And then most importantly, share with each other, okay? Go on the community group, share with each other, show each other charts, show each other those, one of those 10 strategies on the Bitcoin, on whatever market it may be, right? Because you're gonna learn a lot quicker together than you are individually. All right. Thank you very much, guys, and thank you very much for taking the course. I really hope you enjoyed it. If you have any feedback, we love to hear it. Otherwise, good luck in your trading, and we'll see you in the live members chat.
We spoke this morning, we spoke about taking advantage of the gold for the simple reason that it had that triple inside day. Now, I spoke to you and I said the key is the breakout of the inside day, but the real key, and this is something I'm very excited to let you guys know that the footprint course is it's on the verge of launching. And one of the things we really dealt with, in excess through every one of the 10 trade strategies was identifying that clue. Okay, in a nutshell, the footprint is hands down the single most important tool that I have, and I think that most traders have, simply because we can ultimately pick up on nuanced shifts, and that's what the footprint's for. It shows you those sudden changes. Okay, now why that's key in brief: a breakout trade. A market will only break once initiative comes in, once a large influential participant comes in and initiates. Now, you can see that initiation in one of two ways. One is the price ladder, okay, and obviously you can pick up on certain changes in the price ladder, but the other is the footprint, okay, and I'm going to show you what that change looked like just before the break and ultimately how you could have taken advantage. Okay, so yeah, we have the gold footprint. This is a 5-minute rotation. Note the market went into sideways mode. Now this is so typical. This is classic, like a textbook example. Okay, markets will always. Let me rephrase. The best breakouts come when markets consolidate ahead of the break. Okay, that's a real golden rule of thumb. If you observe breakouts for a couple of years, you'll recognize the best breakouts always consolidate ahead of the break. Now, the first observation, note the lack of initiative at these low prices. So what you can see is that every time the market came to this lower end of the low of the day, no one wanted to be a seller. Okay, 29 by 0, 26 by 0, 68, 2 lots. Okay, no one wanted to initiate. Suddenly, we get this imbalance, and this is the first clue. Okay, we get this imbalance, and the market offers down. Now the real clue, and we spoke about this quite extensively in the footprint course, this is the real clue here. It's this little 3 boxes here between 17 and 17.2. Now I'm just going to share it with you, take a picture of it. But what looks very different here, and this is where the footprint is so fantastically revealing. The major difference is not just the change in the color of these boxes, okay, but it's the change in the participation. In other words, in every one of these previous rotations, sellers would not commit to lower prices. Suddenly, what did sellers do here? Sellers committed to lower prices. How do we know? Because suddenly, there was 360 lots traded at 17.2. There was another 320 lots traded at 17.1. Okay, Okay, a sum total of 500 contracts traded over 2 prices, when previously for the last almost 40 minutes there was a lack of commitment, a lack of initiative. And that's the key signal, that's the key takeaway. Once that came in, bang, you're in, the breakout is on, it's game time for the initiative. And that's what we got. We got that initiative splashdown. Our entry point was quite straightforward as well, right on those 17 ones, all the way down. A good 30-35 tick move, which was, lovely, guys. I mean, we're talking about almost a 50% extension of the morning's range. Okay, so a lovely, fantastic, fast money move. And again, then the process of consolidation. Okay, that's the key elements of the breakout. That is ultimately what we look for on the footprint to learn to trade breakouts. Today's debrief is a debrief. I think that's the surprise for all of you. It's a good point in the year to go through a debrief with you, to really show you the nitty-gritty nuances of what is in my debrief, what I look at the end of the day, and the reasons behind why I do it the way I do it. You're going to see a lot of structure to this debrief, a lot of consistency to this debrief, and these are some of the real key elements required to ultimately get the real benefits out of a debrief. Okay, that being said, first and foremost, what is the point of a debrief? Okay, it's simple. It comes down to one word: thought. Okay, a debrief is nothing more than thought. It's a collection of thought. It allows you to rethink some of the processes, some of the things you did during the course of the session. That thought, ultimately, when you go through it, you can then make adjustments to that thought. You can really add some value to that thought, and then begin the process of cognitive, memorizing, of really sort of reinforcing those thoughts that you can draw upon at a future date. That is why we do a debrief. That is the whole purpose of me doing a debrief with you. So just make sure, something that's crucially important. Don't make the mistake, and I know because I've made this mistake, don't make the mistake in thinking that listening to me or a Nick or a, whoever might be doing a Reg, maybe doing a debrief, don't think that that ultimately covers you for a debrief. It doesn't, okay? You listening to me now is a lesson, and that is why these debriefs, we try and make them only 20 minutes long, because that's long enough for you to learn a lesson that you can ultimately then go and apply. Okay, so that being said, let's do a debrief. Let's do it together. I'm going to go through the method and the madness. Remember, most important, don't take my debrief and just suddenly duplicate it. Alright, this debrief is very personalized to me based on what I feel is working, what isn't working, and how I can adjust it. Okay, so my debrief changes with the times as well. Now, it's a very simple debrief. I'm going to take you through it using Evernote. There's no secret. Pretty much our entire firm uses Evernote for good reason. It's a very easy management tool. You can use Microsoft Word. You can use a piece of paper. Okay, it doesn't matter what you use, so long as you actually create a consistent process. Okay, so the first thing you're going to do, and this is where it all starts, we observe the day. Okay, so you want to go and observe the day. Write the day down. Go write down everything you can think about. That structure the day. Was there a lot of data? Was it an economic light data? Was there volatility out of Asia? Was there really little flow in the morning session, a lot of flow in the afternoon? Write down every single observation you can think of that would categorize this day. Now, this is crucially important, because what you're going to begin to recognize is little phases that the market goes through. I.e., for example, back in 2014, there was a long period of almost 3 months where the markets were absolutely dead in the morning. In other words, there was no portfolio flows coming into the market in the morning session. However, once the US session came in, all the markets opened up and there were flows in the markets. Okay, now a simple observation like that through doing a debrief, that ultimately can add so much, sort of consistency to your bottom line just by making a very simple observation. Okay, so observe as many things as you can and write it down like what you want. Okay, so important with every single debrief, and you're going to hear me stress this a lot if you've ever taken one of the courses. I truly believe there is no right or wrong answer here, guys. It's your answer so long as you're consistent in the approach you take to answering your debrief. Okay. That's step one. So for today, we go light on volumes, and holiday, we can type in holiday season still effectively. Volatility, when did volatility come in? So we can say volatility came in over the ADP. And again, this is something you're going to find. You're going to very quickly pick up that, in terms of volatility, it tends to, you get phases where the market volatility only comes around data and then markets die out again. Okay, so again, note everything you can think of. Okay, once you've done that, we move on and we start to become observational. Okay, we start to observe the markets as per individual markets. Okay, so initially we start off with our, the entire marketplace as a whole, the general structure of the day, etc., etc. Then we move on to the markets. Okay, now obviously for me, I list the markets I trade every single day. So I've got Bunds, DAX, SPOOs, Euro, Pound, CAD, gold, and oil. And what I then do is I start and I say, okay, what did I observe in the Bund today? Right, so balanced day in the Bund, balanced day, very low volume, and then we type in things like no initiative, so whatever it is. So we try and almost characterize the Bund on the day. We go and characterize it in whatever manner we can. We try and paint the picture. You almost want to type out your story of what it felt like being a trader in the Bund today. Okay, the story is incredibly important because this story you will not only build on tomorrow, but you'll continue to tell the story over a couple of days and weeks and months, ultimately sticking with the flow of the market. Okay, now I'm not even going to pretend to fill out these other markets at the moment because I haven't done a great deal of trading today or yesterday or the day before that. So again, I've briefly looked at the Bunds today, so I could see there was no real flow in it, no real volume, and no real initiative. So I go and type this out. Then once I've observed all the markets I've traded, I then want to move into my individual trade opportunities. Now, we've got two categories with regards to trade opportunities. We've got one which are predetermined. Okay, so this morning, if you listen to the stream, I spoke to you about the day 2 failed follow through in the oil, and I'm going to take you through this in a minute. So ultimately now we go and type that out. So obviously we noted the oil, we had a ledge, fail break to the upside, and once re-enter range, we initiated lower. Okay. Now what we're going to do is we go and ultimately dive into that trade strategy. Okay, so it's all good and well writing out things, characterizing them, but then we have to go into the real nitty-gritty of the trade strategy. Okay, so the first bit of our trade opportunities are identifiable trade opportunities. In other words, they trade opportunities that we prepared for. We know what the structure is, we know our entry points, our exit points, we know everything about this trade strategy. Okay, so what we're going to go now do is we're going to go now and we would create ultimately a template. So we'd effectively come in, get ourselves a new note. So I'm just going to get a new note just so we can type it up. Bear with me 1 second, sorry guys. Okay, there we go. So we're going to our trade strategies, and again, I don't want to. This is not an Evernote debriefing. This is a debrief, but we would effectively get ourselves a trade strategy called oil, and we would say day 2 failed extension and oil. Okay, now begins the fun part. So now what we do is we actually go into the physical charting aspect. Okay, so we get our charts up like you would normally do. This is how the guys would normally conduct a debrief, and we go into every single aspect of this trade strategy. Okay, so the important thing for me is firstly identifying a day 2 trend. So I'd go and capture the previous day. Okay, I note that the previous day was a trend. Why? Single prints, low volume areas, lots of low volume areas, no real defined distribution on the day, an open at the lower, close on the high, all key characteristics of a trend. So step 1 is identify the trade strategy. Okay, I observed ultimately the trend was there and that there was the potential for a day 2 failed extension. Okay, now we came in this morning, and I'm going to just split this out. We came in this morning, we had 2 definable distributions in the range, and we spoke about this little ledge, and we hinted that any failure to break that ledge and hold the break we'd be looking for some short side trades to target a fill, or at first a re-entry of price, but then a fill of the single prints down towards that 88.90 area. So that was our play, that was our general strategy, and then we go into the nitty gritty of it. So what we want to do now, let's get that sheet up so I can sort of do it next to you, and I'm going to do this on the side. And I really hope, guys, I hope you following along here as I'm going through in this debrief. Okay, so step one, we identified, and again we go and put a little picture there, annotate the picture, color the picture, do what you need to do so that you don't forget the key parameters of a trend day. Okay, so once you've identified, once you've observed the trend day, we then identified our trade strategy. Okay, and our trade strategy, we're going to call it day to trend failure. Okay, and then we go and characterize it. So again, ultimately we know what the principal strategy is. Ultimately, once it gets back below those 16s, once it gets back inside that initial range below 17s, we're looking for a sell side trade to target single prints. Okay, so that is the trade, but that's not good enough. All right, what we have to go and do now is find ourselves our access point, so how we get in, and our profit take. Okay, now for that we're going to zoom in a little bit more. We're going to go have a look at some different charts. Okay, so let's get on a little bit of a 5-minute chart, and let's get up to the oil. Bear with me a second. Okay, so yeah, we have it. Okay, so we can see very early on this morning we had the little extension there. Okay, I'm going to put a nice little line. Had the extension, came back, notice we tested that extension again, came below it, and then utilized those 17s, which turned support into a little bit of resistance. Okay, so crucial, we can see that obviously we did close below those 17s on a half hour, and again the market gave us a chance. It gave us, if not an entry point in 17s, it gave us the entry points at 13s. Now, a lot of you are going to say, where's my stop? Okay, on this trade it's very simple. My stop's going to go above the high. We're going to keep it nice and tidy, and we're looking for this little move here. That's the juicy move we're after, targeting the fill of the single prints. Okay, so now it's important that we go and we again try and capture as much of the information as we can. So we're going to go and snip it here and take a picture of it. Okay, again, we go and highlight anything we can that ultimately acts as an observation. So we can see ultimately we tested the 17s, retested the 17s. Right, we can see then the market formed a little bit of a base around these 13s, gave us an entry point around those 13s. We had quite a bit of sideways consolidation before we ultimately got the move lower. So lots of little key observations. Okay, if we weren't entering there, we were getting enough tests there. Note how much time we got. Okay, this is a good 20 minutes, guys, that the market moved sideways before the drop in price. All right, these are all the things you want to observe. Okay, I might have left things out. Note the pickup in the volume at the extreme point where we happen to make a bottom. Right, these are everything you want to ultimately observe. We right click, we're going to copy it, and we're going to put it back into our debriefing. Okay, now lastly, and this is kind of where I want to move towards now, I want to just show you a little bit of what the footprint looks like, so we can see and observe that footprint. Okay, so just bear with, in fact, let's move on. I'll bring you back to the footprint with the gold so we can spend a bit of time on the footprint. Okay, now once we've done that, okay, once we've observed that strategy, we then come back to our main strategy session, and ultimately, let me just get that back up. Okay, now what we're going to do is we're going to go create a link between these two pages. So we've obviously got our oil page here. We can now nicely close that down, and we can ultimately go and get ourselves a nice little link here. And if we go to the original Evernote page, okay, we can go and get that oil, and we can right click and we can copy an internal link, and then make a nice easy quick link down below our trade opportunities. Okay, so you'll see now there's a nice hyperlink. So when I come back to this debrief page, when I come back to the 4th of January, whether it's this weekend or at the end of the month, I can very quickly click on it and bang, there's the trade strategy. I can pick up on that failed day 2 trend strategy. Okay, now why this is crucial is because guess what? Day 2 trends are going to occur across multiple markets throughout the entire 2018. All right, now if I spend the time observing, identifying, and looking at all the parameters around this trade strategy, then guess what? The next time it comes up, I simply have to come back to this document, observe the key access points. Okay, this is the real nuances. Anyone can find a trade strategy. Anyone can, say this is going to go up or down. That's not the hard part. The hard part is the execution. How do I get in, minimizing risk, maximizing reward? And that's what these access points are about. Okay, this oil gave us 2 very identifiable access points. If that happens again in the future, guess what? You're going to execute more confidently, more aggressively, and you're going to make more money. That's the bottom line. Okay, now, once that's done, we go back into our debrief and we continue to finish it off. Now, the next thing I want to talk about is some of the parts of the debrief that you can't always necessarily, be ready for. Now, if I just get the debrief up. Okay. There's our debrief. So what we're going to do now is we look at certain things. Okay, were there any central bank speakers today? Was there any key economic data? Yes, there was. I'm going to briefly take you to the economic data sheet that I've done already. That's the ADP from today. So again, we go and observe it. What was expected? What came out? What is that in terms of historic? Is it a high number, a low number, good, bad? What does it mean? Okay, we put things into context. We build the picture for ourselves. We then go and observe it. Highest in nearly a year. No real strong positive correlation with NFP, but solidifies the strength. So we go and really observe this data piece called ADP. Now, why do we do that? Well, it's simple. If you want to become professional at executing economic data, which is a skill in its own, you've got to go through a process of learning what ADP looks like, not just on the data, but also on the charts. Okay, then I go and observe it in the German Bunds. So I look how the German Bund responded. Okay, but so important, and this is where a lot of traders leave a lot of information on the table. They look at the outcome, but they don't look at the pre-context. Okay, a lot of the time markets are going to move very aggressively sometimes, and sometimes they're going to move counter to what you think. It all has to do with the structure in which you find that market. Okay, now example. Bund was trading very lethargically all morning, low volume, very, very balanced session going into this number. Okay, we can see that with the market profile. Now, it's so important because when the number came out, we could see there was a little bit of follow through, okay, but a lot of two-way trade before a bounce, and ultimately we're now currently back at the high of the day. Okay, so just factor that in. You don't just want to do a post-match analysis, you need to do a pre-match analysis as well to understand and learn ultimately from the context for next time. Okay, and we do the same for the gold as well as other interesting markets. Okay, and then what we do in the debrief is we then move on and we start to move to the more psychological aspects. So what were some of the emotions I thought today? When I executed? Was I uncomfortable with the risk? Was I thinking about my P&L the whole time? I go and write down every single aspect that ultimately I can identify in terms of thoughts and emotions. Okay, once that's done, we then focus on, some of the areas we want to focus on. So what did you do well today? What did you do badly today? And you really want to focus on. Okay, be honest in the section. It's crucial that you type out, were you unprepared today? Was your routine bad? Were you exhausted? Whatever it might be, write it down. Okay, because then guess what? Your goal for the next day, and I choose only one goal, your goal is to correct that area of focus. Okay. Now, once that's done, we go through some performance metrics. Okay, I like to tick this as my tick box. This is my process box. I tick this every single day. This just reinforces principles. Okay, for example, I believe if you do a debrief every day, you will become better. Okay, you'll become that a little bit better. You will gain something. Okay, so I make sure every single day I tick it off. I then go and I list all my key strategies, and this is something that's really aided me in confidence as a trader. I have all my trade strategies listed in a box. Now, at the end of every single day, I go and tick the trade strategy that appeared. The reason being is that what you're going to come to very quickly realize is that on average, every single trading day of the year, there's at least 2 or more tradable opportunities. Okay, so what that means is if you're patient, you're aware, you're trading with the right mindset, there is zero reason why you should never not make money. Okay, there's always an opportunity to make money. The losses will come from things that I can work on. Okay, and that's really key, because if you know you can always make money, it gives you a real boost of confidence, even when you're struggling a little bit in terms of timing and consistency. Okay. And then other things like, obviously size accumulation. I've got something here called amateur trading performance. Okay, that might come as a surprise to you. Even sometimes I execute like an amateur. Okay, so what I mean by an amateur, it's where I get dragged in impulse trading, weak thought trading, just a random click. Well, I do it all the time, but I can do one of two things. I can pretend to be a professional and say, well, I didn't do any amateur trading, or I can be honest about it, acknowledge my thoughts that I did some amateur trading and ultimately correct the behavior in the next session. Okay, that's ultimately what being a professional about. It's being honest and being willing to work at your game so that you get that little bit better. Okay, and then a checklist. Okay, I've got my checklist. This is kind of my sign off for me. I know if I can complete that checklist with all ticks, then I've had a very successful day. Okay, success doesn't mean money. It doesn't mean green. Success just means that I've executed within my control. Okay, and that's what it's about. You can't control the market, so you can't control the P&L, but you can control your own processes, and that's what that tick box reflects.